We have Drew White on the call here today. Drew, I really appreciate your time. And we are going to unravel the box of this term called infinite banking to a certain extent, because I think everybody's heard it, but I think there's some miscommunications and some misunderstandings of what that actually is and how it can be used. But Drew, I really appreciate your time. But before we do, I really want to make sure everybody has your website address. So it's ibcdrew.com, drew.com. I'll make sure to include those links in the show notes. But Drew, I really appreciate your time, and it's going to be interesting because you have quite the story. I mean, you started off being a nurse, and now you are in real estate investing and infinite banking. Let's start things off. How did you go from point A to point B?
It was a long, winding road. But first, thank you for having me on the show. I've listened to actually quite a few episodes now and really got a lot of value from it. And hopefully I can add some today. But so I graduated from nursing school about 12 years ago, and graduated with $150,000 of, a little bit more than that, student loan debt. Started working as a nurse and realized I was going to make about $35,000 a year at the start. And, that math didn't really add up for me. I was like, wait a second. And so, I used to tell this as like my sob story, right? Of like, I was $150,000 in debt and I made this terrible life decision at age 19. But over time, I'm actually grateful for that situation because it really led me to where I am today. And so for me, it's like that debt is what kind of kickstarted my financial, I guess you'd say, fire a little bit. And so, I became a Dave Ramsey guy and I'm no longer, as big of a fan. But that is really how I started to kind of start questioning things. And that led me a little bit to a scarcity mindset, to be honest, of once I got us out of that debt, it was like, okay, what do I do now? I have no assets. I'm at zero, where do I go from here? And so that's where it really led me to start researching, like, well, what do other wealthy people do? How do I get I recognized that I was kind of becoming a penny pincher. I even couponed at one point. And so I kind of was like, what are the wealthy people doing? And that led me down to real estate, which led me to, if you want to get into it at some point here, flipping mobile homes for a few years. And then during that time, also discovering this infinite banking concept and becoming your own banker. And again, what are the wealthy doing? It's really, copying banks, which is one of the best businesses in the world. And so that's a, brief overview of how I got to here. And I just, actually last month let my nursing license lapse. So officially no longer a nurse.
Okay. Well, so, you're not the only one who mentions Dave Ramsey and in his strategies. And there's some practical good points he makes. Sure, I really like his snowball effect on how to get rid of some debt. But so where are you now? I mean, you said you had $150,000 in student loan debt. It's been 7 years now that you've been doing this, or has it been more than that?
The infinite banking, you mean? Or
the real estate and the different
real estate have probably been about 3 years. We've been out of debt for a while. We did Dave Ramsey calls it a gazelle. And so we did the gazelle style and got out of debt pretty quick, and we were pretty intense about it, worked extra hours and things like that. So I looked into flipping mobile homes and found a coach to teach me that. And then, like I said, while I was doing that, I learned this infinite banking stuff can go, kind of hand in hand with that. And then as I was flipping mobile homes, realized maybe I was thinking a little too small. I mean, it's a good niche, I'll be honest. And you can make some good returns. But for me, it kind of created more of a job than what I was looking for. And I wasn't sure if mobile homes were the long-term thing I wanted to do, in real estate. And so really started looking more at mobile home parks. I've been connected with a few people that they started buying them. And we're, currently in discussions about, me kind of coming on and maybe investing with them. They've got a few deals that we've been discussing, me and two other guys. And so finally, I kind of just recently started making that transition to looking more maybe commercial and doing that there. Does that kind of answer your question?
Yeah, it does. So in a relatively small amount of time, I mean, you've pretty much eradicated your debt. Let's spend a little time on the mobile home park or the mobile home flipping. Because a lot of people, when they get into real estate investing, especially the first time, that low hanging fruit for most people is getting into wholesaling. The concept of getting a property under contract, no money down, that type of stuff. Yeah. But I always found that there's been a lot of success, especially starting off with this lower income housing. I mean, mobile homes usually don't take nearly as much money and resources as a single family home, if you will. Correct.
Yeah. Yeah. And, you're right. And so for me too, and some of that mindset that I was coming out of when I mentioned the scarcity, and so I was coming out of this, I've been in debt and I wanted to get into real estate. And I was like, I wasn't ready to take on, maybe single family and do a mortgage yet. And some of that, required a mindset shift for me a little bit, in understanding that there's some good debt and bad debt. So at that time, I, just randomly found mobile homes and saw, you can have a low cost of entry to get into it. And for me, I had always, and had told my wife this as well, it was really just like, hey, I want to do this to get my feet wet and just kind of learn, on the ground, like boots on the ground, about investing. And I figured what I had read about it was like, you can make a lot of mistakes and still turn out okay. And really, a lot of times your worst case scenario is you break even, and so, and if you want to get in the details, really what I was doing is, providing financing for the homes and doing like a rent to own option. And so you can really, if you can find mobile homes for pretty cheap, my first few were like $500 or less. Do you want me to go into, I can go into the strategy a little bit if you'd like.
Yeah. If you have the time to do that, sure.
Yeah. So, the real strategy there is, you gotta be patient, because there are people who will give you their home, but you don't want it. There's certain ones you don't want. And I kind of learned that on my first one, but so the strategy is a little bit that you're looking for homes that, maybe need a little bit of work, but not everything. And then there's quite a few mobile home people that are handy, but maybe just can't get you can't really get financing for mobile homes. And so you can, tell them, hey, you can finish this as like a, kind of a handyman special, and, do a down payment, and then we'll do monthly payments for, 5 years, 7 years. And a lot of times on the down payment, the goal is to get your money back, and maybe sometimes then some. So you're already starting from either zero or positive. And so I had very few deals where I wasn't starting at just zero, and then their monthly payment now put me in the positive. And so that's a little bit of the strategy there. You can also just, like you talked about wholesalers, you can flip them pretty quick too if you find ones, and you just do cash deals if you want to kind of just get started. So it is, to me, it's a great way to get into it and just get started, and you're going to learn a ton of lessons. My first one, I had 2 pages of notes of all the lessons I learned. So it's definitely an interesting niche.
That's really interesting. So tell me about you making that list of lessons learned. So after you did this a few times, or your first one, you actually stopped, took a breath, and actually made a list of the lessons that you learned from the.
Yeah. So I am, I have it right next to me, actually, Michael Hyatt's Full Focus Planner. I don't work for Michael Hyatt or anything, but in each week he has what's called an after action review. And so you kind of review the lessons that you learned the week before and things you want to stop, keep, improve. And so I just took that same concept and applied it to the home. And I said, what are the things I did well, didn't do well, and what can I improve on? And obviously the improvements were far more. And so, so I just sat there and did a real, which I believe that comes from the military. They do after action reviews in the military. And so I just did a full on after action review on that home. And unfortunately, the things I did wrong were far longer than the things I did well on that home. But again, I still came out, and you can make mistakes, still came out ahead on that one. But I felt like I got lucky a little bit. And so that's why I thought, I don't really want to get lucky again. I want to be more strategic. And so that's why I was really like, I'm going to make a list and learn from it.
So you're holding these notes on these mobile homes. Is that where your mind started to move towards this concept of being your own bank?
It was just random, but it did help me, honestly, because when I first sat down with people talking about this, I explained what I was doing, and they're like, "Oh, yeah, you kind of get a little bit of how to be a banker." Yeah, and that's kind of one of the things I actually did say to some of the tenants. I had to explain, like, when you buy this home, I want to be real clear up front. Like, I'm not the landlord, so if the AC goes out, you don't call me, because you wouldn't call the bank, when you're financing your home, about your AC going out. And so, it did help. It wasn't actually how I got into it, but that did help me transition to kind of like start thinking like a bank a little bit. Yes.
Sure. So in the end, let's define what infinite banking actually is.
Yeah. So it's the infinite banking concept, or becoming your own banker. Nelson Nash created it. Actually, he just he found it in a desperate situation and came up with the idea. And a lot of people, there's two different things I'd say is there's the vehicle that infinite banking uses, and some people like to think that is itself infinite banking. Infinite banking really is more about like taking control, believing that everybody should kind of take control of the banking function in their lives. And I don't know how you got started in real estate, but most people, say, find a mentor, find someone successful doing what you want to do. It's the same concept with banks. And so with banks, they're one of the best businesses in the world. They're one of the best at leverage, at liquidity. And so really infinite banking comes down to, copying what they're doing and and using that in your own life and your own finances as well.
Sure. So can you give us an example? You mentioned the product or what have you to pull this off. Like what are you referring to there?
Yeah. So I'm talking about, it's what we use. The vehicle that we use is specifically designed whole life insurance. And when I say copy what the banks are doing, if you look up BOLI, BOLI, bank-owned life insurance. So banks are doing the same thing. They actually max it out as much as they can to the extent that they're allowed to. And so we use whole life insurance, like I said, specifically designed where we, overfund it. And, your cash value can grow, guaranteed, tax-free once it's in there. We don't focus so much on the insurance, but you do get a death benefit, obviously. And then I would say the beauty of it is you can put that money to work in your real estate. And while it's in your real estate or your business venture, whatever you're doing, that you're actually using the insurance company's money. And so your money continues growing, uninterrupted compounding, which most real estate investors love compounded interest, right? So that's kind of what I mean there.
Sure. So you get this whole life insurance policy. Can you walk us through the process and how this works? You start to fund the whole life insurance, and then you can borrow it to yourself, or how does that work?
Yep. So it has to be set up like, specifically with a mutual company, because with a mutual company, you are considered a shareholder. And so you have certain rights that are, you are given. And one of those rights is to take loans against the cash value that you have built up inside of your system. And so when you take that loan, you're using the insurance company's money while your money is continuing to grow at that tax-free guaranteed rate. And a lot of questions, that and you might ask this as a follow-up is, what are the terms of the loan, and et cetera. It's a simple interest only loan, 5% simple interest. So, $100 million, you're going to pay $5 million at the end of the year. Most real estate people would be like, hey, give me $100 million, right? And I'll go make a lot more money with that. And I'll gladly pay someone $5 million to have use of that money.
Mm-hmm. So, so you said there's got to be somebody in between there, right? Like this isn't accessible, like just simply with a checkbook.
Oh, like how to access the policy loan?
Yeah.
Yeah. So it really, depends on who you work with. If you worked with, my company, we have a point person, and you say, hey, I want to take a loan. For me, like I can give you just an example. Just like a month ago, I took a loan and I called up our point person. I could also just call the insurance company. And, I said, I need this money. And then they ask you how fast and where, which again is far different from a bank, right? You have your money in there, which they technically control, and you go in to use your money and they want to know, your dog's vaccination records and all the things about you, right? Here, the insurance company doesn't actually care what you do with the money. And from their mindset, you have access to it. You're allowed it. So they just say, where do you want it? How quickly? I received mine in less than 24 hours because I wanted it fast for a deal. And so you do call them up, correct. But you have, complete control over how, well, I shouldn't say complete, but a lot of control over how quickly you can get it. Usually it's 1 to 3 business days, but we've seen even quicker. So we say it's highly liquid for that reason.
So when you do take that loan, is there like a term, or a length that you can have it out?
So good question. It's really the only term is you're going to owe 5%, total on it at the end of the year. If you don't pay it back, say next year, you still owe 5% on that. It's calculated daily. So, just simple math. It's $100 at the end of the year, you owe $5. You take a $100 loan, you owe $5 at the end of the year. But let's say you pay $50 today. Well, then they now recalculate it. You owe 5% on the $50. But this is where the infinite banking concept really comes in, because this is where we talk about like thinking like a bank, acting like a bank. So, we're talking a lot about the vehicle, but a lot of what we want to do is recapture that interest that we're letting kind of leak out to other systems, to the banks. And so we talk about playing, and Nelson Nash talks about this in his book, playing honest banker with yourself. So you do want to set up, terms that you for yourself and recapture that inside your policy and repay that loan if you want to be an honest banker with yourself, which is what, what I do and what others in our group do and highly recommend. But, if you need the year for a deal and, you at the end of the year, you just need to pay back that 5% interest.
So earlier you mentioned that you can essentially borrow the cash value of the policy. When you say that, is that the amount of money that you've actually put into the account? Yeah,
correct. Yep.
Okay.
Yeah. So you can borrow up to like pretty close to like 100% of that value that you've started to, put into that system. Correct. And some people, one thing they may get lost on, and I've had a few clients do this where they're like, I have $1 million death benefit, so I can take a loan on $1 million. And that is incorrect. So I'll set that straight here. It has to do with, we call it your deposits, but, the insurance company calls it premium. And so so for us, it's putting a deposit into your banking system.
And this is kind of a low level question too, but when you're paying that interest, you're paying that interest back to yourself within your account, right? Your account is essentially growing with that interest you're paying.
Yep. Correct. Yep. And so, and I'm not a CPA, I can't give, tax advice, but, so there's obvious benefits to that. You're basically setting up a loan between yourself, and hopefully if you're doing real estate, you've got an LLC or some kind of entity. And so, for me and others I work with, they're able to deduct those taxes, deduct the interest that they're paying back on that loan. So there's some benefits there that you're getting, outside the system, and then inside the system, you're still going to get that tax-free, guaranteed rate of return as well, which, at first, sometimes 4% tax-free guaranteed maybe doesn't sound amazing, but when you see it compound over time, and each year it's very different from the stock market where you might be up 10%, the next day you're down 11%, but each year you lock in that 4% tax-free guaranteed, and the insurance company, they can't go back on that number at that point. So,
this is very, your primary competition when it comes to this is obviously the self-directed IRAs. There's a lot of gotchas with self-directed IRAs, and we won't go into that here right now. In fact, there's previous interviews that I've done. What are the gotchas here? Like, what are some of the restrictions that are associated with what we're talking about here today?
Yeah. So I get that question a lot of like, sounds too good to be true. So I would say, the main downside and issue is if someone is a short-term thinker, and most real estate people aren't this way. But the main issue and thing that we come across is there's a first-year cash drag, and it's really basically people used to be able to use whole life contracts, put in $1, get $1 immediately. I don't remember the exact date. I think it was early 80s. Don't quote me. There became kind of a shift to focus more on putting money in 401ks and IRAs. And so as part of that, whole life was made by some laws a little less appealing. So the main drawback is that first year, you can get about 60 to 65% of your cash value if structured correctly. If you're going to go to just like an average Joe whole life insurance guy who doesn't know about infinite banking, to be honest, it's kind of a crap product that they'll give you. You're going to get almost no cash value. So you need someone to design it with the right company to design it properly. But you can get about 60 to 65% initially. And then we call that a cash drag, or we also call it, you're starting your banking business, right? So most businesses maybe aren't profitable day one, right away. And so for us, you have to take that first year hit. But then what happens is if you can look long-term, and like I said, most real estate investors can do this, you're going to see that compounded interest that I mentioned. It's like, let's just do a hypothetical. You put in, $100,000, and I'm not saying that's what people have to do. I'm just giving you a big number. Maybe year 6, year 7, you put in $100,000, you've locked in the gains. You're now able to turn around and loan yourself $110,000. And so you do have to take that first year hit to get to that point. But what we say is there's no bank in the world that really rewards you for your loyalty. When you do your own banking and become your own banker, you get rewarded for that loyalty basically over time.
So, you mentioned that the average Joe who's doing whole life insurance policies, most of them may not even know what this is. Mm-hmm. If somebody is interested in talking to an insurance provider regarding this, what type of questions should they ask to make sure it's a good fit?
Yeah. So you want to know, can you take loans on it immediately? You want to also see the numbers and see that they're not just designing a traditional policy for you where you have no cash value. You want to know if they have limits on how many loans you can take, like the companies that we work with and that we help people set up. There's no limit on those. You can take as many loans as you want. And also, does taking loans affect the growth of your policy? Does it mess up it in any way? Are there any restrictions, any kind of hidden rules? And each person that provides you with those numbers should be giving you like an illustration that you should really thoroughly read through. I don't want to get too into the weeds, but also you want to make sure there's certain, percentages that needs to be designed properly. And there's some people out there who are kind of setting policies up maybe that are going to hurt the person long-term tax-wise, because each contract has a tax number and it's specific to each person and how it's designed, that they can't, if they cross this number, this now becomes a taxable vehicle. And so you want to make sure that person even knows that and that they've looked at it. And that, they're making sure that they're giving you enough room to put in this system so that you're not going to cross that. And that if you were going to cross it, that they would at least let you, like us and the companies we work with. We always, we would never let someone turn this into a taxable vehicle, because obviously it's a terrible idea. So those are a few of them. And then, you want to look for people who really, I guess, understand the infinite banking concept. And to me, it's also important that person's doing that and that they are doing it with their own money, and not just that it's a theory for them, and that someone's actually a practitioner, which is a big piece of the puzzle. You don't want someone just setting something up that they don't know much about. So,
sure. So just to remind everybody, head over to Drew's website, ibcdrew.com. And Drew is also very active on LinkedIn, so it's a great way to connect, and it's IBC Drew. So before we start wrapping a few things up here, Drew, early on you mentioned talking about having a mentor when it came to your thing, and I want to end the show with a couple things, because you had a couple moments, obviously, being trained as a nurse, getting back and getting into real estate investing. These are like earth-shaking mindset shifts that have occurred into your life, and talk to me a little bit about the importance of finding that mentor, and how what other activities have you done to get your mindset in the proper conditioning?
Yeah, that's a good question. So early on, I don't think I understood the value maybe of a coach and of finding someone that can help you. And so I had this mindset of go it alone. I'll figure this out myself, and that's kind of how I did the debt part, getting out of debt. It was really me just doing stuff on my own. But we didn't even get into this, but I did some day trading as well in my career. And I hired a coach during that. And I was very scarcity mindset, nervous about it. And he really challenged my mindset on a lot of things, got me into, meditating, got me into affirmations, and really pointed out some of the, limiting beliefs that I had regarding money in particular. And so I started doing, exercises he would give me. I remember he had one where it was like, write for 5 minutes without thinking about money, just write about money. And it's like all these things came up, like money is the root of all evil and things that you hear. And it made me realize, man, I got some work. And so he was the first one that made me realize, gosh, a coach can take you far and push you, and I was an athlete growing up and played a little soccer in college. And so I always loved coaching. And so, that kind of helped me realize if I want to get into real estate, like I read a bunch of books and I still wasn't sure, where do I start? What do I do? And so I found someone that there's a book by Dan Sullivan called Who, Not How. And so I found a who that really I felt, a connection with, that I was like, okay, I think this is the guy that can help me. And that was at the time, John Fedro with mobile homes. And I was flipping a mobile home within a month because I had a coach. If I had gone it alone, I would have had excuse after excuse, oh, I can't do this. Oh, well, can't find a deal, and so coaches, I really am a big fan. And, I've even had life coaches. And even with this infinite banking stuff, that's really what we call ourselves, as like coaches or consultants, because, you need a teammate in this to help guide you that's doing it. And so for me, coaches have really stretched my mindset and helped me to grow. And then really that set me down a path of reading more. I never really read much growing up. I liked reading about sports, ESPN. And now, I feel like I consume books pretty quickly these days. And sometimes I read the same one over and over too. So.
Yeah. As I've gotten older, I've found that if something resonates with me, I used to just, if I read it once, I used to usually just gave it away, or it went to Goodwill. But now if it resonates, I'll probably reread it a couple times. And then there's some books now that I will almost read on an annual basis.
Really? What would be those books?
Well, Rich Dad, Poor Dad. I'm sure I've read that book more than once. The Richest Man in Babylon is also a great one. The Traveler's Gift is a fantastic book.
I know that one. I've never read that one.
And then I always read Never Split the Difference. That one is that one's an awesome book too. Yeah, Voss.
Yeah.
So, well, before I let you go, is there a question you wished I would have asked you here today?
I think that you covered it well. I appreciate you having me on the show and really enjoyed it.
Well, Drew, I really appreciate your time. Again, everybody head over to ibcdrew.com and learn more about infinite banking and see if Drew and his team can help you out. So thanks again, Drew.
Yeah, thank you so much.